Hello and good morning, folks. We are back again with Almus Market Mornings, your daily dose of updates on financial markets. We all know this very well. Politics is a battle of narratives, and the ongoing battle of narratives is currently doing no good for the world as we see. Likewise, financial markets also, to some extent, operate on narratives which seems to be rattling certain sections of the market. Pankaj, can you tell us what's going on? Crude has moved above 105, and all the equity markets on the pre-open side are negative. Currencies are moving significantly higher. Is this similar to the time as the oil moved previously towards 120, 130, or what should we expect out of markets now?
Thanks, Shikhar. Basically, markets are markets. The crude movement is more on a recent supply shortages, and we are seeing that the crude running into a backwardation of $5 to $7 month on month. So this is a kind of a scenario which nobody would have anticipated, that such a good move can happen without changing much dynamics on our demand side. Now the new target people, actually the Brent is trading more than 110 and WTI is trading around 108 plus. So the next target people will be talking is much higher. Now, coming back to our usual commentary, deepening of the Ukraine-Russia crisis with actual war being supplemented by economic wars, keeping the financial market on the edge. There have been sanctions and counter sanctions, but it seems that Russia faces the most severe hit to its economy with currency crisis and banking crisis, while the rest of the world cannot escape the impact in one way or the other. Considering the scale of the crisis, one could say that stock market losses have been much lesser than one would have thought. Both S&P 500 and Nasdaq are already in a correction territory, and losses can extend as investors sell off profitable investment to make up losses elsewhere. I already discussed oil in a new range. Now upside targets are being hit with a very ease. Now the supplies are not forthcoming. It's almost mirror opposite of what happened in March 2020 and the things which are happening in March 2022. Gold is making a steady progress as a safe haven, but could see more momentum towards 2000 if we break above 1970. On the currency side, Russian ruble and euro are the most hit in this crisis due to direct impact of their respective economies. Emerging market and other commodity currencies have been, I would say, that quite well behaved, maybe because of a market demand, and it could be basically central bank interventions all across. Even the dollar index pushes towards the recent high of 19,770, and which indicates that move can extend up to 99. Risk aversion theme is clearly being played, being 10-year USD yield touched at 167 before bouncing back to 1.75 currently. That's a massive closure to something around 40 basis point drop happened in last 4 weeks. 10-year German bond yield, which is dealing at negative 0.09% after staying positive for last 5 weeks. And these are significant moves for risk aversion. Indian 10-year bond yield closed at 677 and likely to stay above 670 in such a risk averse scenario because we would be getting bitten more by crude oil prices. Crypto assets are also doing well in 1 week as indicated by Bitcoin, which moved by USD 9,000 in a week and dealing at 44,000 currently. Now we can move back to our currency. INR has moved violently both ways, but still within the range of 75 and 76, thanks to perceived stability of currency seen in last several months due to active management by the central bank. Now this proposed swift ban on Russian bank is likely to impact our trade at fund transferred. But the biggest blow would be if the government decides to postpone the LIC IPO to the next fiscal. Market has been positioning itself for a large flow related to it. We sense that the market is quite skewed to the short side with importers underhedged. Large outflow from FIs have continued without RBI's active intervention. We have a prospect of USD INR attempting break of 76.30 during this week or next week. But we see that we would be observing where the RBI does come. We expect RBI to be around to ensure macro stability. Thanks a lot.
Okay, all right, Pankaj, that was pretty good. I do understand there was a lot of expectations of flows on the LIC IPO front, and seems like FM has mentioned that we'll have to wait for those flows to come in, while oil, which has moved significantly higher, can continue to impact the fiscal deficit along with the inflows being delayed. On the other side, you also mentioned that there is risk aversion, but I think cryptos do not see any risk aversion for the time being. So it's fairly a different set of market activities over there. Anyways, looks like the tensions are stretching further than expected. So all the players of the or the participants of the market, we hope that you guys are operating with the risk management set of activities in place. Till then, we hope to see you again tomorrow. Take care. Good day. That's it.